Hello and welcome to BQ Prime. You're watching Talking Point, and my guest today is Mr. Himanshu Mody, who is the Chief Financial Officer at Suzlon. Suzlon is coming out with a rights issue of to raise nearly 1200 crores. The rights ratio of 5 is to 21, which means basically 5 shares for every 21 shares any shareholder eligible shareholder holds, and it's priced at 5 rupees with the part payment at the time of application and remaining at the time of calling from the company. Mr. Modi, thank you very much for joining us on BQ Prime. Uh, in the last 4 5 years, it's been a very volatile time for Suzlon. Uh, where are we standing with respect to financial balance sheet strength as we go into this rights issue, and how is this rights issue going to strengthen the balance sheet for you?
So, firstly, thank you very much, Ajit, for having me this morning. So far as balance sheet strength and debt is concerned, yes, the company has had its own financial challenges and checkered past in the last few years. However, after the refinancing that got concluded in May 2022, and now hopefully with a successful rights issue on the anvil, we will have a much leaner and a lighter balance sheet in terms of debt. Just to put perspective on numbers, as of 30th June 2022, quarter ended, as per our investor relation presentation that's there on the website, our consolidated debt was about 3,200 crores. And out of the rights issue, we are now looking at paring down about 900 crores of debt, assuming full subscription and all calls that have come in. Of course, in addition to that, there will be operational cash flows as well, which will go towards servicing the debt as per the scheduled repayment cycle that we have. So, by the time, whilst I won't be able to give you a precise number on March 23 exit, but March 23 exit would be a significantly lesser debt amount than we see in Q1 of 30th June 2022.
So, the rights issue is divided into two parts. One is application and money, which is 50%. And then subsequently, it's depending on the call from the board or the company, basically. So, do you expect the entire call to happen within FY23, or it may go into FY24 as well?
Difficult for me to say that, Sajid. I mean, that of course depends on the decision the board takes. As per the prevalent norms, the company or the board of directors of the company can decide to call for the residual amount by giving the shareholders a 14 days notice. So
Hmm.
now, once the rights issue is done, then certainly our board will reconvene towards end of the month or early November, which is when a lot of deliberations will happen at the board level, and we will keep the markets informed. But the norms allow the company to or the board to give 14 days notice to the shareholders before the balance money is called.
So, to be fair, at least 450 crores of money from the rights issue will be used to pay debt. Is that the right way to look at it?
So no, not really. I mean, in tranche one, where we are now in the first call getting, assuming full subscription, we get 600 crores. So other than the issue expenses of about 16.5 crores, the entire proceeds of about 584 crores will go towards debt repayment.
Okay, the entire one will go on to debt
Entire.
repayment.
And in the subsequent calls, as and when we get those subsequent calls, the first 316 crores will go towards debt repayment, so that total 900 crores of debt as a rights issue and proceeds is met with. And then the balance will be liquidity available with the company for general corporate purposes.
What is the kind of maturing debt that you have in FY23 and FY24?
So our debt that we have currently is long dated. It's 8.5 year repayment cycle. So there is no ballooning requirement. It's fairly evenly spread out.
So, is there going to be penalty for prepayment of debt, which will be there?
No, so there are certain carve-outs and exceptions in our loan agreement, and any prepayment as a result from the rights issue proceeds will not call for any prepayment penalties.
Okay. Just give me a sense of how what the refinancing is all about, and how much of interest cost saving that will happen as a result of the refinancing that you did in May.
So, if you see our March 2022 balance sheet, because there was, of course, the rupee term loan debt, and in additional, there were, long dated instruments by way of preference shares and debentures, which are almost 20-year instruments. A lot of non-cash interest cost would get billed into the P&L, but that would be all non-cash. It will be all accrual that is happening in the P&L basis.
Hmm.
However, after the refinancing, I mean, our current debt cost is about 9.5%. So, I mean, if you look at, even 3,200 crores at 9.5% is roughly about 300 crores in annual interest costs, annualized interest cost,
Hmm.
which, for the March 22 balance sheet was a fairly high number. So there would be significant savings that the company would have on account of interest cost.
Roughly around 80 to 100 crores, I would imagine that will come down to the bottom line once 900 crores get paid, right?
Even more. But once the 900 crores gets paid, yes, it'll be approximately about 70-75 crores
And
savings in interest cost. Yes.
okay. Um, you spoke about the cash flows which are there. How is the operations doing? What kind of cash flows it's generating now from operations?
So operations, fairly stable now. We of course have a good tailwind visibility in terms of order book. As of June quarter, we had an order book of about 690 megawatts. And subsequent to that, we've been able to secure two big orders. One from Semcop of about 180 megawatts, and just yesterday we concluded a big order with Aditya Birla Group of 150 megawatts. So close to a gigawatt is what we have now as part of our order book. So if I look at it, our capacities for the next 12 months is fairly booked and sold out.
Hmm.
Our O&M business continues to grow from strength to strength. So, operational cash flows and tailwinds available to the company is now quite significant.
Okay. So, depending upon the execution capability which you have, will you be able to execute the entire 1 gigawatt of order book that you have in next 12 months time?
Yeah,
How is it?
we would be able to. Obviously, we are still, so it's all a process, right? I mean, so the order book will keep churning. We'll keep delivering what we have and securing newer orders.
Mm-hmm.
So, definitely we wouldn't have secured those orders if we didn't have the ability to execute them.
Mm-hmm. So, despite the debt payment, you will still have to service nearly 200 crores of debt, which is coming, which interest cost which is coming in from the existing debt. So, yeah, is the operational cash flow strong enough to service that?
More than comfortable, Sajid. So, servicing that debt would not be an issue at all from our operational cash flows. Having
Hmm.
said that, we are also focusing that post-rights issue. There are a few assets which are non-core in nature to the company's operations
Hmm.
that have been identified for
Hmm.
monetization. So over the next few months and quarters, depending on what the board decides, we will also look at monetization of those assets.
What are those assets and how much value can you derive from them?
So one is a real estate on the books, and the other is a subsidiary of the company. Difficult for me to say, value of those assets, but I think we'll definitely discuss that with the board at the ensuing board meeting in first week of November,
Hmm.
and take a call on the timing and value of those assets.
How big is this real estate and where is it situated?
It's the company's headquarters in Pune.
Okay. And so you send off, you sell the entire headquarters and lease back or something, is it?
The potential, we are looking at transaction possibilities. We've of course engaged certain consultants with expertise in that real estate vertical.
Hmm. Hmm.
So at the right time, we'll certainly decide on that.
How big is it in terms of square feet area or land area?
Oh, it's about 10 to 11 acres.
Sorry, I didn't get it.
About 11 acres.
11 acres. Okay. Okay. Cool. Uh, I want to also get into the industry dynamics, how it's changing. There has been impetus to renewables, and how do you see this tailwind which now you're getting in terms of renewable, and how much you are able to capture it in your order book?
Significant. I mean, order book, as I said, we are now close to a gigawatt in order book.
Hmm.
Significant tailwinds from the industry. I mean, last few months, if we see the SECI bids, they have been either wind only or a mix of a hybrid of solar and wind. Significant tailwinds available from the industry. I think, if you look at Honorable Prime Minister's vision that has been set out for 2030, wherein they're targeting 500 gigawatts of total capacity in the country, out of which 140 gigawatts needs to come out of wind. And we are as
Hmm.
a country at about 40 gigawatts in wind today. So there's 100 gigawatt of delta addition that needs to be done in the next 8 years. That's the vision that has been set out by the Honorable Prime Minister as part of the Atmanirbhar Bharat program. And
Hmm. Hmm.
now up to the industry on working very closely with the regulators and the powers to see how we can execute that vision at the earliest.
My question is primarily from the point of view that SECI bids, we have seen a lot of aggression coming in terms of pricing. Does that pricing aggression translate into margin pressure for you as well? Because you are one of the OEM suppliers to them. So, the kind of bids that we see through SECI auction, sometimes it seems very unreasonable. But uh, I'm sure the bidders or the generators will push on that margin pressure to you because they will be forced to do that. Otherwise, they won't get returns as well, right?
That's true. I mean, I can't comment on their business model and their IRR calculations, but I think there historically has been a sentiment from the IPP producers that we can sort of bid competitively and try and squeeze margins out of OEM. But I think the financial discipline that we've now set up in the company, and to an extent, even as part of our refinancing, we now need to be absolutely financially disciplined that below a certain margin, we are not there. So, we won't take business just for the heck of it if we don't see certain margins for the company. If there is another OEM that can provide turbines to the IPP producers, so be it. But there is a certain threshold that we as a company to bring in further financial discipline will work towards, and I don't think we will be breaching that threshold.
Is there a margin outlook that you have for your business
Too early, Sajid, for me to give any outlook on the company or the industry.
or the
But
band that you're looking at to achieve?
difficult for me to say. Let us now. We've just started standing on our 2 feet again. So bear with us till we start running.
Hmm.
One thing I've been telling the media and the analysts and the fund managers that you now certainly will see or hear more from the company. We were in hibernation for the last few years, and as company representatives, we didn't have much of a forum interaction with media fraternity like yourself. But certainly, we will have that increased interaction over the months and quarters where we should be in a position
Hmm.
to give you some more accurate outlook or future what it holds for the company.
Are you also looking at consolidation of your manufacturing plants as well, or that it's scattered all across India at various zones? So, is there a plan to do that, and what is the kind of investment plans that you have going forward as capacity increases, or do you have enough headroom for capacity?
So we have enough headroom for capacity. We in fact have our plants scattered around, as you said, but there is no plan to consolidate those plants. In fact, as and when we get more and more orders and secure our order book, we'll probably need to mobilize or restart some of the plants that are currently non-operational. So our total
Mm-hmm.
capacity today is about 3 gigawatts plus. So even if we have to ramp up our order book, there is no significant capex required at the company end to be able to meet those orders.
So you're sitting on a one-third capacity utilization as of now.
That's right. That's right. I mean,
Uh,
historically, if you see, that was even lower till about 1 or 2 years back. We were not even doing 10% of our capacity, which now has come
hmm.
down to about about 25-30%, and hopefully directionally we'll keep increasing.
Is there a, your leverage will come through your capacity utilization going forward. So is there a, uh, outlook on how much capacity utilization you will exit FY23 with?
Again, difficult to say, Sajit, on those outlook numbers.
Given you're sitting on 1 gigawatt of order book.
So, I mean, I leave the math to you, but I've given you what the order book availability is, but how much of that in FY23 and 24, I won't be in a position to share those details with you at this stage. But certainly, when we come out with our H1 results in early November, we'll provide you a better outlook on the same.
Thank you, Himanshu Mody. It was a pleasure talking to you. The Suzlon rights issue, which is closing on October 28th and it's underway as we speak. The rights ratio is 5:21, price at ₹5 a share. Thank you very much for joining
Thank
me.
you, Sajid, for having me. Thank you.